What's up, Zingers? Welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske, with another phenomenal episode. And with me today, we'll have Peter Tuchman and the one and only David Green. These are some veterans when it comes to trading. They've been on Wall Street. They've been trading for over 40 years together, right? 40 years each, combined 80 years of experience. We're going to go over some market context. We're going to go over what is Apex Trader funding. And I want to cover the 30% rule for Apex because a lot of people don't really understand it. And I want to show how the 30% rule is actually here to help us as traders and how the 30% rule doesn't stick. It actually moves up to 50%. So let's get into some slides, then we'll bring on our guests. I'm super excited for today. So we'll have today's agenda. We're going to go over some live market insights, some trade setups. I wanted to also cover this morning. I was able to take a really nice long position on the ES, sort of near the lows. It was about 59.17. I had a demand zone. So let's get into what is Apex Trader funding. Benefits of Apex Trader funding. As you guys know, Apex Trader funding provides retail traders the ability to trade futures without using their own personal capital. You get access to capital through the futures market. You can't trade options, no stocks. It is just futures. It's a 90 to 10% split, except the first 25 grand you make, you get to keep. So that is huge, guys. And you get to trade with peace of mind that you have zero personal liability. If you buy an evaluation account, and let's say it's on sale, well, then you get it for the sale price, $30, $40. Say the funded fees on sale also for $130, you're spending $160 total of your own personal capital to then be able to withdraw thousands of dollars in profits if you're able to stay consistent. There is a three-step process. Step one is complete the evaluation account. You want to show them that you're consistent, you have good risk management, then you get funded. So it's basically step one again, but now you're on a funded account. And once you hit the profit target, everything after that is going to be profit that you could take and have paid out to you. Step three is, of course, get paid out. Keep up to 90% of your earnings. And again, 25K, the first 25K you make is all yours. Apex has paid out almost 500 million since 2022. That's on average of 11 million in payouts per month. 30% rule, guys. Here's the 30% rule. It's super important. 30% rule basically means you can't make more than 30% in a single trading day. So limit on losses, open trades should not exceed a 30% negative drawdown in the account's profit balance. An example of this for a 50K account would be if your profit balance is 4 grand, you don't want your drawdown to exceed 1,200. Guys, this is not a big ask of Apex. If you're up $4,000, you shouldn't be risking over 1,000 per trade anyways. Let's say you're up 4,000 on your real account. You're not going to risk a whole quarter of that. You're going to maybe risk 200, 300. You're going to be reasonable and you're not going to try to overshoot. New and low profit accounts. So guys, obviously when you get a new account, there is no profit to sort of base that 30% off of. So new and lower accounts base their 30% off of the trailing threshold, which is 2,500 for the 50K account. So that would be $750 per trade. And again, I wouldn't even risk $750 on a $2,500 account. If we're trading our Apex accounts like we're trading the drawdowns and not like the full account size, a $5,000 account realistically is a $2,500 account. So maybe if we are being a little aggressive because it's funded, we're going to want to risk $100 to $200 so we can maybe take a couple wrong trades and still hold on to some profits because we want to let our winners exceed our losses. Absolutely. You guys got it. So adjustment based on growth. This is where things get even better, guys. So if the account doubles the safety net, traders could use a 50% drawdown limit instead of 30. And that is something I bet most of you haven't even heard of yet with Apex. So, and another thing, guys, accidentally exceeding that 30%, let's say you are up that 4,000 and you go down $1,250. Don't think Apex is automatically going to ban you. They're going to refuse a payout. You have time. You could fix it, right? If you're down that 50, you could try to maybe take a light trade, risk 25 to make 50, try to get back within that range again. 30% rule, don't take advantage, guys. Occasionally breaching the 30% limit won't lead to immediate penalties. However, frequent extreme violations, guys, 40% over, 60% over, that's going to raise some major red flags. If your open P&L exceeds 30% occasionally, but you quickly correct it, no penalties will be imposed. Again, if they see that you're hitting 40%, 60% often, they're going to red flag you. They're going to reach out and tell you, hey, listen, we're not a fan of what you're doing, how you're trading, and how you're managing your trades. We really want to see things go a lot smoother, and you want to see you respect that 30% rule. And remember, the 30% rule goes to 50% once we're able to get our accounts a bit higher. So an example of the 30% rule here, the rule is designed to help traders control risk by limiting the portion of profits that can be put at risk at one time. So here's an example of a 150K PA account. And guys, we do have the one and only Peter here, so we'll be adding him on shortly. I just want to show you guys how these rules work. So when you guys trade Apex, you're not confused with the 30% rule. So if you have 150K price action, that's the performance account, that's a funded account, and your best day of profit is $2,000, and you want to figure out, well, how much does my final P&L have to be for myself to hit that 30% rule? Well, you would take the 2,000, which is your biggest profit day, and you would divide it by 0.3. Now, what that's going to do is it's going to multiply it and give you whatever this would be 30% of. So this would be 30% of the 6,667. So your total P&L when you go to request a payout would be this number right here. So whatever your biggest day is, you're going to divide it by 0.3, and that's how you're going to find your 30% in your total P&L that you should have. Account sizes and 30% rule, guys, just a real quick explanation for each account size for you and your max risk that you should be trading, just so everybody has the knowledge of it, whether you trade a 25K, 50K, or $300,000 account. 25K account, your max risk is $450. And again, guys, if you're trading a 25K account where the trail stop is $1,500, if you're risking $450 per trade, that you are over leveraging, and you might blow that account in just 3 wrong trades. So that is definitely not what we're looking to do. The 30% rule is, if anything, exaggerated, and it's really great for us, guys, as traders, to keep us consistent, profitable, and follow our rules. News trading, another big thing from Apex, guys. Some people think you can't trade news on Apex. That's wrong. Apex is one of the very few prop firms that actually allows us to trade during high news events. Apex permits traders to engage in news trading during significant market events, which could lead to rapid price spikes, CPI, PPI, PMI, whatever the case may be. Now, the only thing they have is that you can't be in 2 different positions. You can't be long on ES on one account and short on ES on the other account. They'll red flag that is straddling. That is not fair, right? And that is not right to do for the prop firms. And they are able to give you a ban for that or give you some type of penalty. So you can trade news, you just can't trade both directions at the same time. So guys, you could win a free evaluation. Don't forget, fill out the form. It's going to be in the comments below. Enter the form in the comments for a chance to win. Last week's winner was Yamil. Congratulations. When you win, you'll get an email, and you can pick any account size you want. You would just put the email code into the coupon slot, and that will give you the free account. Join us every week at 11:30 a.m. Eastern for a chance to win. And let's get into some market breakdown. Peter, how's it going, man? How are you?
I'm great. Thanks for having me. It's so good to listen to you talking to everybody there. I'm excited to be here.
Excited to have you, man. We've been getting some strong moves since Trump announced that whole China and tariff deal last week. What are you seeing in the market? I'm seeing a lot of strong continuation. We had the double beats on a lot of large cap earnings. We got Nvidia coming up May 28th. What do you think, Peter? What's going on?
Look, I mean, I can give everybody just a little bit of a background. Obviously, it's been since February 19th when we were trading at record highs. The market's been through high highs and low lows, right? I mean, literally, you're seeing, and I love that the way mainstream media will just, it's like the worst day ever. It's the greatest day since March 2023. I mean, they'll make up these. I mean, obviously, they're probably ChatGPT and they're coming up. These are real things, but like the 9-day rally that, if everyone remembers, you guys are all, first of all, welcome to Apex. First of all, I'm thrilled to be here, and thanks for having me part of it. David is unfortunately at boot camp today, and so he won't be able to join us. So I'm going to keep you as busy and entertained and educated as possible. that 9-day rally that we saw in the midst of all this craziness was actually the long. And think about it, we've had 2024 we had 218 trading days in 2024, and we had 58 record closes. 25% of the days that we traded were actually record territory across the Russell, the S&P, and the Nasdaq. That's insane. I mean, those are kind of numbers that never existed in the old days. I'm not that old, but back in the 80s, right, a big move in the market was up 10, up 20 points. I mean, the volatility that we're seeing these days is never before been seen. And so you guys and gals could not have been learning how to trade futures at a better time, right? This is pivotal. You are at the crossroads of some of the most powerful times in the markets, and you couldn't be picking a better time to be learning and creating an environment and to learn how to trade, right? This is not a get rich quick scheme, right? I know everybody who came in around COVID, and there's all these signal services, and everybody just, said, throw a dart at a wall, listen to Uncle Herbie on the internet, pay $29 a month to listen to some guy on Twitter Space tell you what to buy and what to sell. That is the ultimate of pump and dump. That is the ultimate of irresponsible a way of trading this market. Right now, you've got amazing. So think about it. Benzinga, first of all, I've been on Benzinga for years, right? Long time talking about. Look, so what I do is I'm a trader on the floor of the stock exchange. I'm basically, and besides that, I have a big social media platform. I basically I'm not an advisor. I'm not your financial advisor. Disclaimer across the board. But I'm a forensic broker. So I will break down why the market's doing what it's doing, right? I'm not here to tell you where my opinion about stocks or anything like that. What I try and do is on a day-to-day basis, why is the market spiking up, spiking down, why it's moving the way it's moving, and from a big macro level, right? And so that's really helpful, right? Look, we're day traders, right? At the end of the day, what we want volatility. We want to be humbled by risk management. Think about that. What an amazing opportunity that the stock market gives us to be able to identify our downside risk. Think about that. That was not always the case, right? Stop orders did not exist forever and ever. But imagine, think about it. If we were day traders and we were not able to identify the downside risk in a market, our risk levels would be so much worse than they are now. What an amazing gift that the stock market gives us, the ability to buy 100 shares of XYZ at $50 for whatever reason. And hopefully your reasoning is price action and technical analysis. Those are the only two reasons, in my opinion, right? In the old days, fundamentals worked a lot, but in a post-COVID world, fundamentals. I was talking to some people at the largest clearing firm in the marketplace yesterday, and we both agreed that fundamental analysis in the world post-COVID is just not what it used to be, right? Everyone should know fundamental analysis is basically assets, is earnings and revenues and guidance basically of a company, right? Take the product that they make. What are your sales? What are your cost of goods sold? All that kind of stuff. That's the fundamentals of a stock. And long-term investors and a lot of people whose money is being managed by a broker, if you're at, whatever company that you are, people base a lot of their investments on fundamental analysis, right? What products are in the pipeline? What do the earnings look like, right? What does the guidance look like down the road? As day traders, so we are strictly interested in price action and technical analysis. Technical analysis is basically the art of charting, using moving averages, using pivot points, which is, you don't need to overthink it. Pivot points are, whether you're on Thinkorswim or Interactive, or you guys are on, Apex has all of that stuff already built into it, right? So all of those things are think about it. So Wall Street Global Trading Academy, David Green, who you've seen with me on this show for the last couple of weeks, right? We built a course, we built an academy around the time of COVID. We spent 6 months. We saw the opportunity when the democratization of the trading community happened around COVID. If you go before COVID, right, you have to be an accredited investor to be trading and investing in the stock market. What changed then was the Robinhoods, the Weebles, and this was sort of before futures funded trading. I'm not sure how long Apex has been around. Maybe they were there back then, but basically things changed then, right? Once everybody with an iPhone and $100 could suddenly trade the market, trading futures, trading equities, whatever it was. The world changed. The market opened up. Everyone was invited to this party, right? It was like that, that party. You grew up in the suburbs. It was that party that you never got invited to. Well, now you're all welcome at this party. That is an amazing thing. However, very few of those, in fact, none, have an educational component to that platform, right? And so that's why we are collaborating with Apex. You guys have an amazing platform at Apex to basically give you all the opportunity and the accessibility to trade futures in the marketplace, right? What an amazing gift, right? You don't need $25,000 in your account and be governed by pattern day trading rules and all that. Apex offers you the ability to get accessibility to the market, be able to learn how to trade without risking a lot of your money. What they're doing by collaborating with me and David at Wall Street Global Trading Academy is taking two people. There are a lot of people out there selling courses. There are a lot of people, whether it's online trading academy, and I don't like to diss anybody out there, but suddenly, you have people who've been trading for 2 years and they're suddenly experts. I've been trading for 137 years, as well as David has, right? I went to high school with Alexander Hamilton. I've been around for a while. He's buried across the street behind Trinity Church. But at the end of the day, what the experience that we have trading this market is so invaluable. And we took the opportunity when COVID came along that suddenly all this accessibility happened, and not just Apex, but a lot of different firms gave people the accessibility to the markets, trading equities, trading futures, trading options, whatever it may be. However, nobody, had an educational component to it. So that's why we're collaborating with Apex, right? You guys have the platform. We've got the course. David Green, who I started on Wall Street with in 1985, right? He started as a squad, right? Which is the lowest rung on the totem pole there. There's no training for the job here at the stock exchange. You start at the bottom, you wear a little blue jacket, you make $47 a week. I started as a teletypist. That was the next job up from being a squatter or a runner. And you work your way up. Historically, it used to take 13 to 15 years to go from the lowest rung to become a broker, right? Everyone's dream and goal was to become a broker. In 1903, they released 1,366 seats, right, which gave you the right to trade stock. It was a limited amount of seats, right? It's never changed from the day they issued them until today. There's a limited number. It's kind of like a taxi medallion, right? So the price of a seat, which gives you access to trade from the floor of the stock exchange, has gone up or down based on the markets, based on the economy, based on all the enthusiasm in the world and the whole world stage, the economic stage and the trading stage. So we found this opportunity when COVID came along, right, to be that educational component that a firm like Apex would collaborate with. Because look, David Green went from being a squad to being a market maker in probably four or 5 years, and ended up being part of one of the largest takeovers in Wall Street history when Spear Leeds was bought by Goldman Sachs bought Spear Leeds, one of the largest market making firms. He ended up retiring at 38 years old after being a market maker for probably 15 years. Right on the floor of the exchange, a market maker is someone who takes all the order flow from all the buyers and sellers from all over the world. They have it in their hands, and they're basically able to trade the market. Sometimes we used to call it's like shooting fish in a barrel, because you had the buy orders in one hand, the sell orders in the other hand, and you knew what you were the market. You were the market maker, so you knew what was happening on both sides. At the end of the day, he left that job when the buyout happened in 1999, and went home to try and trade. He thought that he had never done anything else. He thought he was the greatest trader in the world. He promptly lost $300,000 because he had not taught himself technical analysis yet. After that, he realized, you know what, this is not a sustainable trading position I'm in here, because the money I made on the takeover is going to run out pretty quickly. So he went out and learned technical analysis. We don't have the holy grail on it. There are a million people who know it, who teach it, who offer it up. All we have is our experience over many, many years of working on the floor. And we put together an incredibly exciting course. It's 21 videos, 21 hours. We coach and mentor all our students, right? We teach the language of the stock market. We teach risk management, money management, order management. We teach the 5 technical analysis trades that we like to work with, right? I mean, there are people out there whose charts are full of lots of dots and lots of lines, and it's nothing. It looks like air traffic control on 9/11.
A coloring book.
That's not what we want for you. We want to keep it as simple as possible to give you super relevant features in your charts, right? And Apex has an amazing ability of doing that, right? And so that you're able to use moving averages, RSI, relative strength index, right? Pivot points, whatever it is, double top, double bottom, whatever it may be, to learn how to trade this market, trading futures in this incredibly volatile market. Look, 2024 was an amazing year, right? As I told you, 58 of the 218 days were trading at record highs. The market closed up in the S&P 23.8%. That was after 24.8% in 2023. 2 back-to-back years. Since COVID, we are up over 100%. 2022 was the one down year. Was that it? Yes. Right. 2020 and 2021, even in the eyes of COVID, right? The Federal Reserve printed $3 trillion and put it in the money supply over a 4-month period of time. We were back to even by August. Think about COVID now. Remember March 23rd, 2020. What a horrible time for absolutely everybody, right? I ended up getting COVID. I was like given 4 months to live. It was horrifying. And I was like patient zero. I got COVID on March 15, 2020. Enough of that, though. But what at the end of the day is, we put together this course that has it's amazing, and I hope you all go check it out. We've done a fun collab with Apex on it. But look, it's discipline and consistency. I can just lay out for you like the 5 simplest rules that we teach, which look, if you take the platform that Apex offers you, and then you take David Green's 5 simple strategies, they're probably more than 5, it's probably 7 or 8, but simple things like having a stop order on every trade. Right. I mean, you ask a lot of retail traders in the market today, are you using a stop order? And so many of them will go, no, I use a mental stop. If you're using a mental stop, you're mental. In a market as volatile as this, there's absolutely no place for, first of all, no stop orders or a mental stop order. It is a gift that the stock exchange gives us, the ability to put a stop order to identify your downside risk. If I buy 100 shares of XYZ at $50 and I have a stop order in down 1%, like everybody uses different methods, right? The average daily range, ADR is one of the methods. I use 1% of the price of the stock, right? You buy 100 shares at $50, you put a stop order in at 49.5. If the stock gets stopped, if you get stopped, never move your stop orders. Another thing, people love that the closer this stock gets to your stop order, they like to move it because they hate acknowledging the loss of money. They would rather lose $100 more than they'll lose 50, right? It's a crazy thing about the psychology of trading the market, right? People never like to accept losses. Stay in a trade too long. Good, right? The whole of successful day trading is to get the most out of your winners and lose the least out of your losers. That is by following rules of discipline, putting in a stop order down 1%. If you get stopped off, cool, you move on to the next. $50 doesn't make you a loser, doesn't make you a bad trader. You're just in a stock that went your way. In a world like this where you're one tweet away from crazy town, you can be in a trade for all the right reasons, right? The technical setup, price action is perfect. A tweet comes out, market goes down 80 handles, and you get blown out. But you'll never blow up a trading account because you have a stop order in there at a reasonable level. So you get stopped out down $50, down $100. You move on to the next trade. If you're in the trade, I bought 100 shares at 50 and it goes to 50.5. People need to know how to take profits. Nobody got broke taking a profit, right? There's no point in watching a stock that I bought at 50 go to 53, not take any profits, and you go to get a coffee and you come back and it's trading at 48. Your first impulse is to buy more, to average in. If you're averaging into a trade, you're in a bad trade. These are all, look, don't have the holy grail. These are the strategies that we've, after 137 years trading the market, these are things that we've built into our system that work for us. Why do we use them? Because they work, right? We want people to lose the least amount of money, to make the most that they can out of their winners and lose the least. You got to know when to stop trading when you're making money, and know when to stop trading when you're losing money. Okay, have a target amount of money you want to make in your day, right? If you're a 100-share trader, $100 should be your goal, or somewhere around there. 1,000-share trader, $1,000 a day. When you hit your goal, turn the machine off. Time is the only commodity you will never ever get back again, right? So know your relationship with it, because people love to overtrade. I'm having a great day. I made my limit. I got diamond hands today. I'm gonna, I'm hitting it on every piston, and they'll overtrade and they'll turn a winning day into a losing day. I'll be up $800, $1,000 in my day, and I'll think I'm having a great day, and I'll start getting a little bit irresponsible. I'll raise the stakes. I'll start buying bigger. I will use a little wider stop orders, and I'll turn that $1,000 gain into $1,000 loss. So one of our basic premises is never turn a winning day into a losing day. If I've hit my target and I'm insistent that I got to keep trading, we have the thing called the 20% rule. Right? First of all, you can hire someone to stand behind you with a 2x4, and every time you overtrade, it just smacks you in the back of the head. Or you use the 20% rule, which is, if I'm hit my limit and I just can't turn the machine off and stop trading, if I give back 20% of my $1,000 or whatever your goal is, then I have to turn the machine off. Why would I want to turn a winning day into a losing day? Makes no sense. Also, turn a winning trade into a losing trade. These are certain things. There's certain disciplines that differentiate a successful trader from a not successful trader. It's kind of like, there are two kinds, and I'll take a break in a minute from ranting, but think there are two. I'm sure everyone here has been to a casino, right? There are two different kinds of people who go to gambling, right? There's somebody who goes to the Wynn Castle in Vegas, or wherever you're going to go. You go to Atlantic City, and you have a plan, right? You got $1,000. You sit down at the table. If I make $1,000, I'm going to turn the machine off. I'm going to take my family to Ruth Chris for a steak. I'm going to go see a show and enjoy my weekend. Okay, right? That's a disciplined trader. That's a disciplined gambler. And then there's somebody who has no plan, right? Has no discipline, who goes with the same $1,000, does not have any kind of set plan and discipline that they're going to do. They're up 1,000, they're up 2,000. They think they got diamond hands. They start their chips. They're all in. They start betting bigger and bigger, and they were up $2,000. They're down 2,000. They're down 3,000. They're back at the ATM 4 times, and before you know it, they can't pay June's rent. So same thing with trading. We're here to hit singles and doubles. That's what a successful day trader does, right? It's just discipline, right? That's the bottom line. There's no point. We talk to traders all the time, and you'll say, how you doing? Well, I'm batting about 80%. Oh, so you must be making money. Well, no, not really. I had 4 trades where I made $100, and I had 1 trade where I lost $8,000. That is not a sustainable strategy. At the end of the day, we want to hit singles and doubles so that we are profitable at the end of the day, the week, the month, the year. That's what a successful day trader does. An unsuccessful day trader has no plan on how much he wants to make, has no stop order, watches the stock become profitable and doesn't sell it, and waits until it goes down and then averages into it. Okay? When you have 3 max losing trades on the day, you turn the machine off and go home. Doesn't mean you're a loser. Doesn't mean you're a bad trader. You're having a bad day. You'll come back from a bad day. You'll come back from a bad week, although we don't want to have bad weeks, right? But you don't want to. What happens? The alternative is revenge trading. I'm sure everyone here on this call has done that. Overtrade, revenge trade. I got to get back that money I lost. And you will turn $1,000 loss into a $5,000 loss. And that will be difficult to come back from. So these are just a little bit of my partner David Green's strategies. We call them like the 10 commandments of love, that from experience are what makes a successful trader successful. Somebody who will come out at the end of the week with green on the screen. That's our goal as a day trader, right? We're not talking long-term investing. We're talking about making a couple $100 a week is $1,000, a couple $100 a day, 1,000 a week, 4,000 a month, disposable income, right? Multiple streams of revenue. That's what it's all about. Anyway.
No, absolutely, Peter, man, I love it. And I can't agree more about when we have rules in trading, when we take losses, that doesn't mean we're a bad trader. Our rules in trading, our risk management, that's what makes us a great trader. And that's what keeps us in the game in the long run. If I'm able to say I'm risking 150 per trade, I have a 2-to-1 risk to reward. Guess what? If you have a 2-to-1 risk to reward, you could win 50-50 and still be in profit. How fantastic is that? I mean, even a 3-to-1, which might sound like a lot, but I mean, today I caught, and I'll do a trade review for us like David usually does, I was able to catch a 4-to-1 on the ES because I was patient. Markets were choppy. I waited for my zone, my technical analysis, and my entry, and it paid me back, right? The markets take the money out of the hands of the impatient and put it in the hands of the patient, right, Peter?
Yeah, 100%. Think about it. Am I willing to risk 100 to make 200 all day long? But I'm not willing to risk 200 to make 50. Because if I have one losing trade, I need 4 winners to break even. I'm always chasing failure. The psychology of that mentality. Look, what is better than getting into a trade, have a stop? Just for one last example, I give you. So I buy 100 shares at $50. I have a stop order at 49.5. If I get stopped out, I move on to the next trade. If it goes to 50.5 and I sell half of my position and I move my stop order to break even, I just made 50 cents on the trade and I can't lose money on this trade. That builds so much confidence in a day trader to have made a little money and cannot lose money on that trade. That gets you through. You have no idea how that helps curate a good, disciplined trader's mindset. This is all about mindset, right? That's the difference between a good trader and a bad trader. And then it goes to 51. I sell 25% more of my trade. And I move my stop up to block in a 50-cent profit. Everyone needs to see this whole mindset that I'm there making money, supporting my trade, supporting my profitability, not giving back the money I made, and then use a trailing stop all the way out and get the most out of my winners. Right? And lose the least out of my losers. People will stay in a losing trade so way too long. It's not English, sorry. But I mean, think about it, because they don't want to accept the loss. But if you think about it, if I were to say to them, would you rather lose $50 or $200? They'd go, well, 50. But they will stay in a losing trade because they don't want to lose that. That's what we don't want that for you all. This is one of the most pivotal times, right? Think about it. You've come and you're on the Apex platform. You've met me and David Green. We've got an amazing course and academy to teach you technical analysis, risk management, money management. You'll get out of this what you put into it, right? Right? It's not gonna. You just let it flow over you. Journal your trades. Write down the trades you made money on and you lost money on. Find out. You will learn so much more from the failures than you did from the winners, because you won't want to make that mistake again. These are the things. My dear friend Kevin here. Look, we've been doing this for a while. And if you journal the successes and the failures, and over time you see, then you'll pick a stock. You know what? Every time I trade NVIDIA, I lose money. Then don't trade NVIDIA, right? I mean, that's the bottom line. It's like going back to the well that doesn't make you money. Just stop going there. But if you don't have a nice journal about where you made money, where you lost money, the strategies that worked for you, the mindset that worked for you, that's what's going to be. Look, becoming a successful day trader takes time. It's a curation process, right? Yep. Same thing happens with like salami and with smoked salmon. It doesn't happen overnight. You want to make things. It takes time to learn and build that whole mindset, because we are our own worst enemy, right? The hardest thing to do is what goes on between our ears. Right? I mean, over trading, revenge trading, all that stuff I just described, staying in a trade too long, not using a stop order, all that stuff. Yep. Everybody does it. Everyone needs to know that 85% of people who try and do this fail. So if you're here and you're making money, you are the chosen people. That's the bottom line. And so you got to dig that. That's the cool thing. You are one of the successful ones because you follow the rules of discipline.
Yep, absolutely. Peter, I'm glad you brought up journaling because I feel like that's something that really flies under the radar when people think about trading and think about getting into trading. Because last thing anybody wants to do is spend a half an hour writing down why I got in this trade, where I got in this trade, what. But guys, that is what the 85 to 90% of traders that are failing are not doing. For us to make that difference, make that impact, we have to do what they're not. And once we do find that consistency, like Peter said, gratefulness that you're able to find consistency and get paid out, but keep doing what you're doing. Keep journaling, keep trading the same system. We never want to stray from what's working just because we see somebody online is doing something else.
Right. The grass is always greener. That's silly, right? When
You'll
things are
never be happy. Yep. I did want to mention, guys, I do have a free trading journal. If you guys do want to download it, you guys should check out the website. If we could pull up on the screen for just a quick second.
Doesn't Benzinga have a journal built into the system?
You know, they don't. I do some one-on-one coaching myself.
Sorry, my bad. Apex.
No, that's okay. Apex doesn't have a trading journal. They do. I believe you could link your Trade08 account to like TradeZilla, which you have to pay for. Yeah.
Amazing. He's a good friend of mine. I mean, that is an option. Or look, you don't need a service to do it. At the end of every day, what we teach is at the end of every day, you should buy down what you bought, what you paid for it, what time it happened, what was happening in the market when you made money, and what was happening in the market when you lost money. Did you lose because of a tweet? Were you over trading? You know, what was something happening? And were you distracted? Right? Were you eating lunch? Did you get up to go get a coffee? Did you not use a stop? Did you move your stop? Right. And so when you curate the mistakes you've made and turn them into, look, it's the greatest. But life advice is the same thing. And it's like, never go to bed angry, right? Because you're going to wake up angrier, right? Same thing there. When you're success, this is a process. This takes time. Don't think you can do this and it's going to happen overnight, right? And it's not going to just like, you put it under your pillow and you're going to wake up and be a trader, right? At the end of the day, what goes on between our ears is the hardest part of this whole game, right? So if you follow those rules, think about it. You're hearing it from, I've literally been doing this for 40 years, okay? You're gonna hear about trading from a million people who started 2 years ago and they're suddenly experts. Not that I'm by any means an expert. I am forever a student, right? I listen to everybody else. You've got something that works, I want to hear about it, right? Because this is an always changing industry. That's why I do what I do, right? I analyze the markets, why they move the way they move. That's the exciting part. What today's market is so different than the market in the 80s, in the 90s, in the 2000s. It's a different market. It's a different environment, right? That's why I always talk about that, that the economists will analyze things using old metrics. The old metrics don't work anymore, right? But when you have a market that can be a bull market at 11 o'clock and be a bear market after lunch, that used to take a generation to happen. Well, then it's no longer relevant, right? People need to wake up in the morning. Today's a new day. And that's how you trade the market, right? And always be a student. Right, that's the great humility of this game.
Absolutely, guys. Just real quick, for that free trading journal, head to tradingpioneers.net and go under resources. I do some one-on-ones, a little separate, but come over down to trading journal, and I created a great journal. In my opinion, it shows you your trade entry, your reason for your entry, and just like Peter was saying, it goes in depth of what are we looking at, review of your trade success or failure, analysis of what went well and what could be improved, ideas for future adjustment or modifications to your strategy. These are all things we should be reviewing every single trade so that going forward, I could say, oh, wow, look at that. It seems like when I wait for a demand zone and VWAP or a fair value gap or a volume shelf, whatever the case may be, when you start seeing repetitiveness in your journal through the success, that's when you know you're creating a successful system for yourself.
100%. And look, and as I said, it's everything that's going on. It's literally what's happening in the day. I mean, that's why if you guys, I will post things at the end of every day. I post a video about what happened in the day. I mean, and you can use my videos. If you go to Einstein Wall Street on Instagram, I do a forensic breakdown of what happened in the market every day. And that's helpful too, because, markets trade up and down for a reason.
Yeah, Peter, man, You're one of my favorite people to follow on Instagram, on social media. You know, I love seeing all your reviews, everything you cover, the different shows you're on. Really fantastic, man. Amazing stuff. You always bring some of the best information and really news and things we could think about and consider. And as a trader, and sure I'm speaking for everybody in the comments, we thank you.
That's absolutely my pleasure. Look, I mean, I found something I love to do. Right, I've been doing this for a long time. This, for me, it's like being in the Super Bowl every day.
Yep.
And also my partner David Green, he's incredible at this. He loves what he does. If you guys ever get the opportunity to hop on, David will be back next week, right? And or come and join the Wall Street Global Trading Academy. We did a masterclass, a webinar masterclass last Wednesday. If you go to wsgta.com, right, go check that out. You can post that. The recording of the masterclass is on our website. If you go to Instagram, my Instagram page, you will see it in the link tree. It's now called the Stackhouse. It's no longer Linktree. You can go there and watch the masterclass, and we talk about trading futures. Right, in our course, we have a 90 slide thing on futures alone. Right, all about trading futures. So look, we pivoted out of equities into futures probably 6-8 months ago because it's the flavor of the moment. Right, all the barriers to entry are down. Right, it has made it accessible for all of you people who do not have that 25 grand. I mean, the 25 grand for anybody is a lot of money. And then to have 25 grand that you can look, you don't risk it every day, no matter what you're doing, but still it's on the table. It's out there. And so to be able to come to Apex and have a platform that you can buy whatever it is, it's $18, $30, $50, whatever it is today, and they have amazing sales. To be able to do that and learn how to trade that. So if you guys put Apex together and then you go check out Wall Street Global Trading Academy and you put that collaboration together, it's like gold, Jerry. It's like a bowl of soup at Mendy's. It's the best thing in town.
Bowl of soup at Wendy's. Oh man.
At Mendy's, you're not.
Oh, okay.
That's a Seinfeld reference.
Okay. All right. Very good. I'm just making sure you're not drinking any soup from Wendy's.
No.
All right. Awesome. Guys, if we want, we could do some technical analysis. I covered a long position earlier on ES this morning live. Unless, Peter, do you have any other information you might want to cover? Anything about the market? Any news related? Did Mr. President tweet anything?
Yeah, I can give you a little breakdown on where we're at right now at the moment. So we started this conversation before I went into that rant about, how we had the big sell-off from February 19th. Then we had that we were down mid-April, right? We from trough from April 7th to May 2nd, right? We went down 20.8%, and then we rallied back and it was amazing. We were all waiting around. What ended up happening with the market was the tariff thing, that the markets can handle anything. We've handled pandemics, we've handled wars, we've handled everything, except what the market can't handle is the way information is disseminated. It cannot handle uncertainty and surprises, right? And so unfortunately, for that 6-8 week period of time from February 19th until the mid-April area that's all we were getting. We were getting a lot of uncertainty. We did not know how much the tariffs were going to be, what countries and what companies were going to be tariffed. We didn't know. It was nothing but uncertainty. And the market had started to erode a lot of the confidence in the market. And we saw that reflected in that massive, very short-lived sell-off that we had, down more than 20%. So everybody's 401ks became 201ks. And there was a lot of fear and anxiety. We saw the VIX. If everyone doesn't know what that is, that's the fear index. That goes up when the market goes down, right? It's an inverse relationship more times than not. And so what you ended up seeing was it went as high as 60. This is a stock that trades normally in the $14 or $15 range, right? And but with anxiety and fear in the market to the levels that it was in mid-April. It went from 14, 15 to $60. So that's where we were. What ended up happening was we hit a bit of a technical bounce, right? Basically, there's an old adage on Wall Street that the market climbs a wall of worry, right? The market is very forward looking. And so nobody could imagine that we were not going to get these deals, right? We had been promised deals. There were deals on the table, but we weren't seeing them. A deal with China, a deal with Philippines, a deal with India, a deal with the UK. But we were, and we were told by Mr. Lutnick, by Mr. Besant, that we were getting these deals, yet the deals were not showing up. And so the market sold off quite aggressively. At one point, people realized, you know what? There's got to be some backdoor diplomacy going on here. And so deals got to be in the works. And so they started to buy the market, right? And then Mr. Trump came out and said, buy the market. That was surely, people needed a reason to buy the market again. And surely having the president of the United States tell everyone to buy the market surely contributed to that. And then we got our first deal with China, which once again, before we got that first deal, though, we had 9 days of a bullish market, which was the longest rally since 2004. We basically regained 18% of the sell-off that we had in April, which is groundbreaking. What I kept saying when we were selling off, and it looked really dark for a while, and I will accept the fact that I made a few mistakes there because I wasn't clear we were going to get out of that downward spiral because I did not know what the White House was going to do. The bottom line is they did what they did. They made a few deals. We still have a lot of uncertainty. Let's be clear. We may not be out of the woods. We came in this morning. We were down 50, 60 handles. I don't know where we are now. But the bottom line is there's still a lot of uncertainty in the marketplace. And yes, we have a deal with China, although we don't know specifics. Yes, we have a deal with the UK. Yes, AMD and NVIDIA made great deals with the Saudis. These are all great things. We are checking off a lot of boxes. Right? And the market has rallied back a lot. We have gone literally from down on the year to up on the year. We've regained the big sell-off we had in April. These are all amazing things, right? We've got AI, we've got NVIDIA's back of the flavor of the moment. So many things that looked really dark in April are now back. You know, you can see the forest through the trees. You can see the light at the end of the tunnel. But there's still uncertainty. There's still some problems here. Although the market is building a nice foundation for the next leg up, right? We are now, where are we? We're in mid-May, right? We're going to have the rally that we're seeing is actually, so I analyze these rallies to see, right? The advances versus declines are significant, right? We just saw, if everyone remembers, when we came into work this Monday, right? The market had been, the U.S. economy had been downgraded on Friday night at 6 o'clock by Moody's. Moody's is a rating agency. Now, this isn't a fact that most people don't remember, but Moody's rated Lehman Brothers. If everyone remembers the financial crisis of 08, 09, Lehman Brothers, the firm that was sacrificed by the Federal Reserve, Moody's gave Lehman Brothers 2 days before they failed a AAA rating. Okay, think about this. Moody's, that just downgraded the United States debt, right, to whatever it was, to really bad, right, was the same rating agency that rated Lehman Brothers a AAA 2 days before the company went bankrupt. So put that in perspective and go, you know what? Rating agencies don't mean, excuse my language. And when we came in on Monday, the market was down because all weekend long, people were mucking around with that story that came out Friday afternoon, right? That's significant. So when bad news comes out on a Friday night and you have all weekend to listen to all the people talking, everyone has an opinion, you know, what opinions are, right? I don't need to go there. But by the time we came in on Monday, we were down 60, 70 handles on the S&P. However, the news came out yesterday that $4.1 trillion was bought. 4.1 trillion or billion, maybe billion. $4.1 billion was bought in the marketplace on Monday by retail traders. They're able to track that. These were not institutions. The institutions are on the sidelines right now. So think about it. That's very significant. That means that you are all retail traders, that $4.1 billion. That market, they opened down 60 something handles on Monday morning due to the Moody's downgrade, closed in the green on Monday. It went from the lower left to the upper right on the graph. When you have intraday reversals like that, people should take notice. That is significant. You have trend days, right? I know you guys do trend trades. One of the greatest, most successful trade. Everyone should be in it, right? Trend, market's going in one direction or the other. It pulls back to its moving average, the 9 and the 15. You buy in or you short it and you ride the trend and you use a trailing stop and you get the most. You can ride a trend trade all day. It is one of our most successful trades, and you never don't get out of it until the trend breaks. That's one of the great trades, right? So all that being said, Monday was so significant that $4.1 billion was bought by retail traders in the market. And no one could really figure out why we went from down 70 in the morning to actually up on the day. Well, that, in fact, has come out, and that's what happened. So that's significant. That means that people are deploying money. People have found a reason to buy stocks again. People are shaking off a lot of the tariff thing, even though it's significant, right? We're having problems with Walmart. President told Walmart to eat the tariffs and to stop crying like a baby, right? So we've still got some things going on that are going to be obstacles. The market may not be completely out of the woods. Stevie Cohen. I don't know if you all know who Stevie Cohen is. He runs Point72, one of the largest hedge funds in the world. Multi-billionaire. He owns the New York Mets, I believe. He's still calling for a major pullback in the market, and he thinks we're going to have another crash. I don't necessarily agree with him, but whatever. I try not to make predictions. But at the end of the day, there are still people who feel we're not out of the woods, that the tariff thing is going to be big, that there are going to be major supply chain interruptions, which is very possible. We do know that there are boats lined up in the sea in China, right, that cannot leave the port because they don't know what the tariffs are going to be. I mean, think about it. If I make a product for $7 and I sell it for $23 and the tariffs were $4, well, then my cost of goods sold is $11 and I sell it for 20, whatever. I make $10 or whatever on the trade, right? It's selling a product and trading. It's the same thing. But if I have a looming tariff of 185% or 80% or 70% or 30% more than I had before, okay, and I don't know, not locked in stone, what my tariff is, I can't take delivery. You realize that a company has to pay the tariff when it leaves the port. Right? So people who are now wondering what the tariffs are going to be are not filling the boats with product, right? Think about it. It's now, so there's an 8-month lead time, okay, for back to school stuff. I know this stuff because I've been doing a show on CNN and it's something I've been studying lately. So I know what's going on. And the bottom line is lead time is about 8 months for these ships to come from China. All the back to school stuff, right? All the knapsacks and stuff for back to school for September are supposed to be on the boat on their way to Walmart, but they're not because we don't know what the tariffs are going to be. This is problematic. This is what we're up against. Back to school is a problem. Christmas presents are already a problem because we're getting close to lead time there. So I do a show with Dan Ives, right? Dan Ives is the #1 tech analyst in the world, works for Wedbush. He and I have a show called Einstein and Ives. We're also on CNN every night. This is the stuff we talk about. This is the information that that analysts, that portfolio managers talk about, right? That's the stuff they need to know before they make a recommendation, right? The guys upstairs who are the investment managers of big wealth, high wealth people need to know that information. They need to know, is the boat half full or half empty? They need to know that the port in LA is running at a 50% capacity. They need to know that the truck stops in Kentucky, where it used to have to reserve a place to sleep overnight a month in advance, are now running empty. That means that the cargo, that the container ships are half empty, that the trucks are not carrying full weight going across the country, whether it's an agricultural product or something you buy at Target. This is all super important stuff that's going to affect the way Target trades, Walmart trades, NVIDIA trades, all that stuff. That's going to be affecting what's happening in the market, in the supply chain. We may be looking at, remember everybody what it was like when you couldn't find paper towel and rubbing alcohol when you needed it back in COVID times. The supply chain interruption is a big deal. And that could be what we're looking at. I'm hoping we don't. I'm hoping everything is just going to be fine. Cup half full. It's all going to be great. We've got deals pending with all these countries, and we're going to be able to pull this thing off. But there is a chance that we're going to have some issues, right? That's going to affect the market. It's going to affect stocks. It's going to affect everybody trading, right? And so everybody needs to know this. It shouldn't affect your day trading. It shouldn't affect us scalping the market here and hitting singles and doubles. But it's important to know in the back of your head, why is the market suddenly selling off because we just heard about a tariff, right? All that stuff is super important.
Absolutely. Peter, what are your thoughts? I just got a notification. It's a little off topic from the stock market, but of course some relation with the presidency, the U.S. and everything. U.S.
Sure.
formally accepts luxury jet from Qatar for Trump.
You know what? I don't really want to talk about that. I think
I get that.
Yeah, I think I'll plead the fifth on that one.
I like the answer, Peter. One last thing I want to cover, and I like that you pointed out about how Moody rated the market. It's not good, but what's a rating really mean to a market, right? And market structure, it means nothing. Hey
No.
guys, look, Kevin of Benzinga, I'm going to rate the market bullish. Does that change anything? Absolutely not. It's not an economic impact. When we have something like we had our tariff worry, and that's what gave us that uncertainty, that big sell-off, that huge move from our all-time highs over, I think it was 22% to the downside on the ES, the S&P 500.
Yeah.
What turned us around? Nothing turned us around until we had some tariff certainty, a tariff deal. We had Inauguration Day was, I believe, like Peter said, the 7th. And then on the 9th is when he announced, okay, we came up with a deal with every country but China. That was tariff deal number 1. It gave us our reaction reversal in the market. Tariff deal number 2 is the one that we just had where he came up with the China deal with the tariff and US-China deal. This is part 2. Now, can we see continuation here? Do we want to make some all-time highs? Our market's back in bullish. We're less than 5-6% away from all-time highs. Peter, what do you think? You think we're going to pull back first, or you think we're going to steamroll our way up there?
You know what? I mean, my gut is we will close this year up double digits. That's my feeling, But look, I can also say that there's, it will 100% be based on what happens with the tariff and the supply chain issues, and.
Yeah.
Whether one likes Mr. Trump or not, and this is not a political show, it's, he's a wild card no matter what. And as I said, we're one tweet away from crazy town. And so all of that can change. My hope is that we will get our thing together, that the tariffs will be reasonable, that he will negotiate his way into good deals for everybody, because it doesn't serve anybody to have to pay. A tariff is a tax.
Yep.
So if you have high tariffs, you have high taxes, and nobody is served well. So no one is served well by having to pay large sums of money for that kind of stuff if it's not necessary. And so I'm hoping that's not the case. It could happen. It may not, and I hope it doesn't. If it doesn't, then the market goes higher and it's all good. But like I said, we're one tweet away from crazy town.
Always. And that tweet could come at any time. Middle of the night, middle of the day, when market opens, when market closes, middle of the market open. Peter, I like what you pointed out. That's something I didn't even think about the supply chain issue. When do you think, now you're saying that it's usually 8 months ahead, right? So when would that sort of start to take a toll on us?
It's already happening now.
It would. Okay.
So Dan Ives is speaking to the ship captains in the port in China, and there are boats backed up. There are 100 ships backed up there that are half full, not filled up yet, because they don't know what the tariffs are going to be. So we are on the cusp of a potential problematic situation. It can all be ended with reasonable tariffs and a deal being made. But we don't know. A lot of these things are unknowns, and so that's got to be remedied in the next couple of weeks. We've got a window. The window is probably July. If we don't settle this stuff by July, we could be in a jam.
And when you say settle this, you mean a stronger deal than what we currently have, our 90-day deals we're dealing with?
Well, like a deal etched in stone,
right?
Deal that's reasonable. a deal where that the companies can cover some of the tariff costs, some of it on the consumer, some of it, wherever, so that it's affordable to everybody and that it's a reasonable deal, and it can keep the flow of goods and services going. If there is an interruption, if you'll remember what happened in COVID, it took a while for everybody to get back online again once we hit the switch, right? So these are problematic times. Yes, look, sometimes the market and the economy go in hand in hand. Sometimes they go opposite. And right now the market is rallying really beautifully, and thank God for that. However, the economy is still up against a lot of hurdles, and those hurdles are tariffs, and those hurdles are the unknowns around policy. And if the policy is not taken care of over the next 4 or 5 weeks, then we'll have some trouble.
Awesome, man. Peter, as always, what a pleasure having you on today. Great information, great insight. YouTube, Twitter, Benzinga TV. Make sure you guys show some love to Peter. Thank you so much for being with us. Hit
Always.
that like and subscribe. Thank you, Peter.
Talk to you later, guys. Bye.
Talk to you later. Everybody, make sure you hit that like, subscribe, and I'll see you guys next week, 11:30 a.m. Eastern, for Futures Fever, for a chance to win a free Apex account. Next week, we'll have David Green on as well, maybe take some live trades. Really exciting stuff. Always happy to have you all, and I'll see you guys next time. Take care.